Thursday, we get results from Macy's. So many people are betting against this chain because it's developed a habit, a nasty habit, by the way, of missing the numbers. I think that negativity means it might actually be a decent trade going into the quarter. Or to put it another way, can Macy's really be as bad as the stock seems to be suggesting? I don't think so. Hey, the Bloomingdale still looks good. There's nice stuff there. I get some stuff from my wife there, apropos of absolutely nothing. Anyway, if you buy Macy's for trade, don't overstay your welcome, though. By contrast, Ross Stores reports after the close, and this is another one of those worshipped stocks. The discounter almost always reports a decent number. Then the stock gets hit, usually for about $2 to $3, and then you buy it because 10 days later, it's dramatically higher. That's just how it trades. I've been trading it forever. And then I once, they have really cheap belts and umbrellas. Then there's Splunk, the cloud-based software analytics play. Earlier this week, the stock was hammered by a boutique research outfit that argued the shares might be overvalued. I think Splunk's fantastic, although I recognize the space got a little crowded, including a tough competitor that we're going to introduce to you tonight that I think you might like more than Splunk. That's a hint. That said, well, I'm siding with the bulls when it comes to Splunk. Now, let's talk about one more that is really problematic versus the old days when it was just red hot, but that was the days before the web. Nordstrom. This is another department store that's generally perceived as being completely off its game. Their new store in New York City, I went there this week, it's Marvel. But it's also a symbol of everything investors have rebelled against. A big brick-and-mortar institution with high prices, no real place to park. Hard pass. Oh, and remember the bulls out there, please be careful on Thursday. You know what happens? This Loretta Mester, she's the president of the Cleveland Fed. She's going to be speaking, and she is a one-woman bull market wrecking crew. She's amazing. I mean, a little over a year ago, this woman talked about an accelerating economy right when we were about to crash, said the Fed needed to tighten aggressively, right when they needed to loosen aggressively. It was an appalling performance that contributed to the market's horrendous fourth-quarter meltdown. I wouldn't be surprised if she does the exact same thing around this time. What can I say? She's a downer. Friday, we take the pulse of the food stocks with J.M. Smucker, and a group that's been all over the place. Smucker's really been bad. They got these categories, pet food and coffee, that are a little too competitive. I think the stock can bottom, though, at a certain level. I'm certainly waiting. And then get this. Foot Locker reports, and this one's too difficult for me to game. If I like sports, I'll go get Nikes. I'll go get Under Armour's, more on that later. Of course, these days we scrutinize everything through the prism of the trade war. I think Foot Locker's numbers could give us some insight into how the consumer's handling the tariffs. So far, so good. The bottom line, after still one more bullish week, and that's not deniable, that's not fake news or interesting, it's not it's just true. This market needs a win in these negotiations with China. Bring home the bacon. If we don't get something positive, I think the whole edifice will start to crack. Unfortunately, at this point, it's really up to the Chinese. But that might make these big pork purchases and keep cracking down on fentanyl smugglers. And guess what? I think that will do the trick.